Welcome back to Biz Asia America. U.S. real estate continues to roll along with prices in 20 major cities gaining significant ground since November 2012 compared to a year earlier. That period had the biggest gain in the marketplace for nearly 6 years. I spoke to Yale professor Robert Shiller about the outlook for the U.S. housing market in 2013. He's also the co-founder of the Case-Shiller Home Price Index.
Housing price depends on so many different factors that are hard to predict. And we're still in a 7.8% unemployment situation. So it's not clear that confidence is going to come back.
For our international audience, obviously the United States is a very diverse group of cities put together. The index measures 20 U.S. cities. Are there any cities that you found in particular that had especially surprisingly strong or surprisingly weak set of data points?
Well, the surprisingly strong city is Phoenix. And Phoenix is a strange example because their housing market hadn't been very volatile. And they came kind of late to the housing boom in the early 2000s. And Phoenix is not the place you'd expect to see a housing boom because they have so much available land. When you come in on an airplane flying into Phoenix, you see land everywhere, vacant land. And builders say that it's an easy place to build. So it doesn't make a whole lot of sense that there would be a bubble in Phoenix, but that's what we have. Well, it's up over 20% in the last year.
Perhaps it's all the golf courses. I think a lot of golfers would be happy. It is a very sunny place. Now, last time we also talked about this hidden inventory at the banks, and for our viewers, the hidden inventory is the bank-owned properties, the ones that have been previously foreclosed on over the past 3 to 4 years that they've held onto their own books. And there was a lot of concerns that the banks would release this inventory into the open market. Now, we haven't quite seen that, at least in the media thus far. What's happening with that inventory?
Well, I think that you have to look at not just the bank-owned inventory, but look at the supply of potential new inventory, because we still have millions of houses underwater, and we still have a 7.8% unemployment rate. So this flood of new foreclosures isn't done yet. It's down, but it's still going. And the inventory that might come is substantial. We have kind of a wishful thinking bias now, thinking that, well, home prices are going up, so people who are underwater now will be above water in a short while. But that might not happen. It might, I think the future is just very hard to tell right now. We're seeing some upward momentum, and it might continue, but it might fizzle again, the same way it did in 2009. We had upward momentum in the housing market between 2009 and 2010, and then that fizzled.
Professor, how much help is these low mortgage rates? A lot of talk from real estate agents. If you speak to them, they'll tell you that it's the best time to buy a house because of the mortgage rates.
Yes, interest rates are very low now, and it's a good time to be a borrower. Now, the question is, how long will they stay this low? That we don't know. They might stay this low for a long time, so that would mean there's no urgency to buy. But if they were to shoot back up, then of course you would have missed an opportunity not to lock in a long-term mortgage at a low interest rate. Yeah. Certainly, interest rates are at record low, or recently were at record lows, and that is a factor. So I think it's a reasonable choice to buy a house now. Well, I just wouldn't get too crazily optimistic about it.